Many personal trainers, online coaches, gym, studio owners are struggling financially. Why? Not because they lack the ability to make money to get clients, but they lack the ability to understand their finances, understand the methodology behind financial setup, and most importantly, where their money needs to go. In this special training that we're going to be sharing with you from our Pathway to Profits online course, I'm going to unpack for you the exact strategy on how you can break down your finances, you understand your business finances on a finer level, and most importantly, know exactly how to structure your bank accounts so this can set you up for your successful financial future. Now, if this lesson resonates with you, the content, our delivery style, then we highly encourage you to get your hands on the full Pathway to Profits program, which is right now going for an insanely crazy price. You'll see the link in the description where you're listening to this. And of course, if the trainer methodology does resonate with you, if you like our style and you like tuning into our podcasts, then make sure you do hit the subscribe button so you will never miss out on our latest episode. Enjoy, gang. I'll see you on the other side. Bye for now.
In this module, we're going to run you through the best way to not only understand, but also record your income as a personal trainer. So we'll talk you through how you can have a better understanding of the actual numbers that come into your bank account. We'll run you through some accounting basics that every fitness trainer really does need to know. We'll show you the methodology on how to pay yourself first and have what we call a profit first mindset. And we'll also teach you how you can go and set up your bank accounts to make sure that everything runs as smoothly as possible. Now, for many PTs, unfortunately, they're just floating along. They don't really have a structured process. They don't really have a structured system in place. And this is concerning because what we see is really they're out there and it's fingers crossed and it's called the hope plan. They're hoping for the best, hoping it's all going to work out. So we would like to break each of these categories down and show you what you need to do with each and every dollar that comes into your bank account. So let's first of all kick off with the total or the gross income that enters your bank account. So this is first and foremost, this is the amount that you would get paid. And I'm going to go under the assumption that everybody that's listening to this program has set up some sort of direct debit structure where your personal training sessions, your weekly session fee, whatever it might be, gets deposited straight into your bank account. Now, this total or gross income, it might have some goods and services tax included in it. And this depends on what country you're listening to this from. But we're from Australia, and right now we do have GST, goods and services tax, included in that amount. Now, before we go any further, you do need to know that this goods and services tax, this GST, it's not your money. And once again, unfortunately, too many PTs can fall into the trap of not really understanding this, seeing a total amount of money in their bank account and thinking that this is absolutely amazing. So what you do need to do before you do anything is make sure that this money will get put into a separate bank account. So you pretty much don't touch it, you don't look at it, and it's not your money. And I'm going to run you through the structure behind that very shortly. Once you have now taken off this GST, this gross income that comes into your bank account will get divided in a number of ways. So let's just break this down step by step. So first of all, there's a total amount of revenue that comes into your bank account. And I'll give you a practical example of that shortly on a typical PT and what a week might look like. So we'll first of all minus off that goods and services tax if that applies to you in your particular country or region. And once we've minus off that GST, what it means for you is this amount of revenue or this amount of money will get broken down into a couple of different ways. Number one, there's a director's wage, and that is the bit where you do need to pay yourself first. Number two, you will have legitimate business expenses. And so every business, no matter how big or small, will have some level of business expense. And so we need to factor that part in. And of course, every business wants to be profitable as well. Now let's talk a minute about taxation. Whatever country you come from, we're pretty certain that there's going to be some tax involved, and tax will be attributed to a couple of different parts. Number one, if there is a director's wage of some description, then that will be subject to some sort of taxation. And of course, when your business is also profitable, that will be subject to taxation as well. Now, this particular program is not designed to become your accountant. It's not designed to give you the ins and outs on exactly how to structure that. So what you do need to do is you need to make sure you speak to somebody in that area. So let's define a few of these categories just so you feel very clear on what each of these means. Number one, the director's wage. Number two, the business expenses. And number three, the business profit. So I want to break each of these down, give you some definition around it, give you some explanation so you feel very clear on how you need to create your structure. So the director's wage, number one, this is the part where you will pay yourself. And our recommendation is that you do pay yourself first. Reason being is that for many people, what they do is they pay everybody else first, pay their expenses first, and they sort of take whatever's left at the end. So we're very big on setting up a system or a structure that's based around the fact that you can get paid your part, your wage, and what this does, it takes care of any of your personal living expenses, and it also enables you to establish some sort of personal savings plan or move into some sort of personal wealth creation strategy, which is above and beyond the scope of this particular course. However, it's definitely an area that we are passionate about. You want your business to become the vehicle to supply you with what it is that you want in the future in terms of your lifestyle. Now, what we do see too many fitness professionals do, you need to make sure that you do separate your personal and business expenses. And too many PTs and fitness professionals just don't do that. So you need to break each part down. So we've seen too many PTs simply pay their living expenses directly from their business bank account. And that is not a good habit. It's not a good practice to get into, because suddenly you can fall into the trap of the money coming into the bank account, and then suddenly you just start paying your rent or your mortgage, you start paying your personal living expenses, whatever it might be, and suddenly the money just starts to go, and you're unsure about where it's gone and unsure about where it's accounted to. So that part is incredibly important. If we discuss legitimate business expenses, because every business will have expenses in some description, these will be claimed as taxation deductions. And what they effectively do is they go to reduce your taxable income. Now, once again, before we go any further, I've got to let you know that I'm not an accountant, and this program is not meant to be your accountant. So you do need to get yourself a good accountant. You need to make sure you get a good support crew and a good support network around you of the professionals that can steer you and guide you in the right direction. So before you go and assume that every expense that you spend for the business is a tax deduction, you need to just run that stuff by your accountant and make sure that you are moving in the right direction. Number three, business profit. Of course, every business, it does want to be profitable. And making money is good and turning over revenue is good. However, being profitable, it enables you to generate real wealth. And so what a business profit means is that the director, i.e. yourself, or if you're in some sort of partnership, it enables you to be able to draw down an additional amount of money, which is very much the reward of your hard efforts and everything that you've put in. Alternatively, maybe you might use the business profit to reinvest in the business. Let's say you want to open up your own PT studio or gym or whatever that might look like. Then you've built up some profit in the business, and instead of you going to the bank and having to take out some finance, there might be some profit sitting there for you to be able to utilize to further grow the business in the right direction. Once again, the unfortunate part that we see is that many business owners take their bit once everybody else has got paid. So we follow a profit first model, and so what we do is we suggest a fixed percentage of revenue that you would put across into a profit bank account. And it's an amount of money that you know that you can sustain. So it doesn't have to be a huge percentage. For many PTs that we've worked with since 2008, we've advised them to even start with a small percentage of their total revenue once the GST's been taken off. So that might start with 2%. It might start with 3%. It might start with 5%, depending upon the revenue that's coming in and the other commitments and so forth. However, the great habit to get into here is to make sure that we do start up this plan so that as you move into your business, you're 2 years into it, you're 5 years into it, you're 10 years into it, you can look around and see an account there that's been growing and there is profit in that particular account. So let me give you a practical example on a typical personal trainer, and this might be a typical PT that operates underneath the roof of some sort of commercial gym or facility. Let's call her PT Sally. So let's suggest that PT Sally here makes $2,000 after she's taken off any particular goods and services tax that might apply to her in her particular country. Now, she has legitimate weekly business expenses of $500. And this might include, for example, some gym rent. It might include her mentoring and coaching and any other small things that get added up over time and averaged out. So what now happens is we take those legitimate business expenses of $500 and we minus that off the $2,000. Now, right now in Australia, the company tax rate is 27.5%. Depending upon the country that you're in, you do need to check your local tax rates, and this is where a good accountant is going to come in very handy for you. But right now, at the time of recording this particular program, the tax rate here in Australia is 27.5%. And what that means is of that $1,500 that was left over, roughly $400 of it would be attributed to tax. Now, if you get out your calculator and you punch that in, what you'll probably find is I've averaged out these numbers just to make it look a little bit more cleaner for the purposes of us doing these sums, but we're going to get pretty close to around about that $400. So what would happen is that $400 here, that would get put into a taxation account. At the same time, what Sally is doing is she's decided to put aside 5% of her total income into her profit account because she wants to build up some sort of profit. Now, of that original $2,000 that she had after GST, she's taken 5%, and 5% of that is $100. So she's taken $100 and she's pushed that straight into the profit account. She's also figured out for her to live week in, week out, that she needs roughly $800. And the $800 takes care of her getting by every single week. So if she shares an apartment with somebody, she's got to eat, she's got to have some personal things that she takes care of, and she's figured out over time that roughly that $800 for her is enough for her to get by. What that means out of that $2,000 is it leaves her with a buffer of approximately about $200 each week, which she can then leave in her business main trading account. And the beauty of that is that there can be some money sitting in your business account, which means that certain things are going to pop up and you can take care of them if they're slightly over and above some of the weekly expenses. The thing I like about breaking this down, and once again, since 2008, we've broken this formula down for literally thousands of fitness professionals, thousands of PTs. The thing is that PTs can get quite shocked when they see that. They think, wow, I had $2,000, but the bid I get is only roughly $800. So it can seem like quite a drop down there. So you've got to be mindful of that. Of course, you also got to be mindful of that you are building some profit there. There's some extra money in the business account. But it's such a powerful thing to understand your numbers. So to break it down a bit further, $2,000 after the GST's been taken off, $500 of legitimate business expenses. That means there's $1,500 of taxable income is left over, which we're going to set aside 27.5%. It's roughly $400. And if Sally was to put aside 5% into a profit account from that $2,000, that's roughly $100. $800 goes to her as her director's wage, which means that there's roughly $200 left over in her main trading account. The power here is for you to know your numbers, know them step by step, know them bit by bit, because if you don't, then there's a chance that you may not reach your financial goals, your financial targets. And there's a chance that you might not be able to build the successful PT business that you're looking to do. So you really do need to track and you do need to understand these finances. And I would view it as your duty to do this. I would view it as your responsibility to do this, as not only a a high-level professional, fitness professional, I would view it as someone, as a business owner, you really do need to take this part on board seriously and be very mindful of it. Let's have a look at your bank accounts and how we could potentially break down your bank accounts. Now, I will let you know that this is quite a basic structure that I'm about to show you. And this is a structure that anybody can set up quite easily. You can set it up with your online bank accounts. But let me run you through it. So first of all, you're going to have a main business banking account. It's your main trading account. It's the account where all of the business income and revenue will arrive into. It's also the same account that you will pay your legitimate business expenses out of. So this is your main business trading account. The second account that we're going to suggest you set up, if this is applicable to you in your particular region or country, is the goods and services account, the GST account. So what will happen is if you are collecting that on behalf of your government, you will take that money off immediately and farm that straight into that GST account. The third account we're going to suggest you set up is a taxation account, because you're going to have to pay some form of personal tax. You're going to have to pay some form of company tax. So a good accountant will advise you roughly how much per week you need to be putting aside, or per month you need to be putting aside, to make sure that you meet any tax obligations that you have. So that is mandatory. You need to take care of it, and it is your responsibility to do that. As discussed before, we're going to recommend that you have a fourth bank account set up, and this is to pay yourself directly. So this one sits to the side of your business account. So you're going to pay yourself personally, and we're a big fan of figuring out what that amount of money is, to making sure that you can sustain the type of lifestyle. Now, that particular director's wage, that is going to assist you in your personal life. It's going to assist you to create your own personal savings plan. It's going to assist you to take care of any personal expenses that you have. And it's also going to assist you to be able to create your own personal wealth creation strategy if you have some type of investments, which is another thing that we highly recommend. So that's going to sit separate to your business banking accounts. Next thing is you need to make sure that you do have a business profit account. And this is the fifth bank account that you would set up. And as discussed before, you want to figure out what the ideal percentage is for you, a fixed percentage. And if you're in a growth phase or you're in a startup phase, you might find that maybe it's an incredibly small percentage. Look, I don't care if it's 1%. The thing I do care about is that you are farming away a portion of that revenue into some profit account. The sixth and the final bank account that we recommend that you set up would be the vault account. And the idea behind the vault account is a bank account, just like the name implies, that you do not touch. It only gets broken, it only gets opened in the case of an emergency. So if something pops up that is just totally you did not expect at all, there is a bank account there that is growing, enabling you to be able to access it as required. Now, once again, how much do we put into that vault account? Well, just like our recommendation with the profit account, it will be a very small percentage of the total revenue that comes into your business. And this will be totally dependent upon the stage in business that you're at and the type of revenue that is flowing through that account. So there you have it, a basic structure, 6 bank accounts for you to set up. Very easy to do and very easy for you to manage once this occurs. You might be wondering, well, when do I do all this stuff? And the answer is right now. Right now is the time that you do need to establish an effective system and make sure that you are sticking to that and making sure that you are following the process so that you set yourself up for financial success.
All right, gang, if that methodology definitely resonated with you, the concept, the methodology on how to better set up and structure your finances, your bank accounts, and what we're speaking about here does feel like the right fit for you, make sure you do get your hands on the rest of the Pathway to Profits program, which is going to unpack our strategy on what it takes for you to build a wildly successful and profitable fitness business. Thanks for tuning in, gang, and I'll see you soon. Bye for now.